I just want to share a couple questions I'm getting from folks, and just see if any of this is in anyone else's head as well. So a lot of people are asking things like, especially since the market went down about 38% and it jumped back pretty quickly. People are asking questions saying things like, thank goodness it bounced back. I wonder if we should sell now just in case it heads lower again. That's one question I've been getting. And then another question I've been getting is, I meant to add additional money when it was down. Is it too late now? And I find it really interesting that I'm getting those two questions. And something that's important, and we'll get to a solution for this towards the end here, but the person who's asking the question never really sees what this question is. Never sees the question for what it is. It's a speculation. The answers are unknowable. I don't know where the market goes from here. Nobody knows where the market goes from here. No one has any clue how the economy, what the economy is going to look like when it comes out of coronavirus. And more importantly for us, it doesn't really matter. And let me explain that for a second. You see, when we're investing, we're not buying a piece of paper and hoping that the value of that piece of paper goes up. We're buying small pieces of thousands of different businesses. We hope that each and every one of them will be successful over time in the future, and that they will grow their earnings and pay us an increasing dividend. But it doesn't. We expect that some of them are going to fail. We build in to our models and to our diversification the idea that we expect some businesses not to make it. What we're buying is lifetime income streams. And you'll be buying more this month and more next month through like dividend reinvestment. If you're in a 401k, you're contributing to 401ks. If you're retired, you may be pulling money out. Many folks aren't pulling money out. They have incomes from pensions or Social Security, and they can slow down on their withdrawals right here. And if we're buying that kind of 50%, 50-year income, a long-term income stream, it doesn't matter if you buy today or 10% higher or 10% lower, because investing, contrary to sort of popular opinion, isn't about getting the timing right. That is speculation. Investing is about accumulating more of the good stuff whenever you have the money to accumulate. That's all it's about. And then being patient, come what may. And this is what we're in the middle of. We're in the middle of come what may. We're in the middle of a lot of questions. And this is honestly why I meditate. So when you can kind of imagine somebody that's never meditated, you might be such a person. And I hear this a lot when somebody sits down on their cushion or on their chair for the very first time, your mind is just racing and racing and racing. And that's because the mind is attached. The mind is attached to things, to thoughts, to the past, to different kinds of outcomes. The mind has a place it wants to go, and it's going to take you there. And it's designing where it wants. It's designing what your pattern of attention is going to be spent on. We're always attached to things, but when we meditate, we begin to see how those attachments can rule us. And as we sit in the relative safety on a cushion or on our chair in the quietness of the morning, we can let go a lot of distracting thoughts. That's why they call this a practice. They call this practice exercising these letting go muscles, because these are muscles you can strengthen for when you're faced with things that are completely unknowable. And letting go of the outcomes that are unknowable is really important for all areas of our lives. It's important for our relationships. It's important for if you're in business, do I invest in this product or this service? It's really, I can tell you, it's really important in parenting. And yes, it's important in investing. We don't know what's going to be new and everlasting out of this experience. I'm almost positive things are not going to go back the way they were, but they never do. Like, we learn something new, we move forward. Every new step and change in the world is incorporated, and then we move on with a new beginning. And it's not bad necessarily. There's parts of this that are very bad and scary, but it isn't bad in and of itself. And I want to say that there's a space through this I think most people we talk to see that there's a space through this. There's questions about specifics, and I think David brought this up. What should we expect coming out of this? I think there'll be questions today I think we'll begin talking about this probably today, and definitely again next week and then the following week. As we have more government officials talk about, hey, we're going to open this economy up, and as we have more people wondering when they can go to the restaurant again, we'll start asking these questions, and this is what's going to come out of it. So with that, I think that's what I have prepared. I want to just check in. Is David, did you want to add anything? Remember, you're on mute, so you'd have to unmute yourself if you want to add something.
Well, I when I raised it in our earlier meeting, I think that it's natural for people to be wondering whether and how long it will take for the economy to recover. And, earnings are what drive the market with regard to the companies that we own. And so the expectation, certainly in the near term, is that earnings might be down. We're going to start finding that out in the next couple of weeks as earning reports come in. Obviously, there are still some companies within the economy that are functioning very well and that in fact see greater business during this time period, Amazon being a good example. But whether that can't prop up the whole economy, it can't deal with all the small businesses that are really in crisis at this point. I think underlying our perspective is that we believe, as every occasion in the past has demonstrated, that the market will come back. It's just a matter of time.
Yeah, I think you start out with a really good statement there, and that's people are wondering whether and how long it will take for the economy to recover. And I think and I don't mean this. I don't mean to minimize, right? So whether absolutely the economy will recover. I mean, we talked about the last couple sessions here. The idea was this has an endpoint, and that endpoint is when we have herd immunity / vaccination for everybody. That's a known endpoint. Now that's not in the near term, right? So there are potential outcomes in the next 3 months, 6 months, 9 months, 12 months that don't require herd immunity or a vaccine. Still, for complete recovery, where everything is hitting on all cylinders again, we're going to need herd immunity and vaccination that's global and broadly available. Between here and there's going to be testing and tracing, and there's going to be social distancing. There's going to be all of these things we're already doing are going to continue. Hopefully, they won't continue, as strictly as they are now. Hopefully, we can open things up. The how long it takes. That's a really interesting question, because we have to remember that there's two pieces to this. The first piece is, it wasn't, yes, governments did say, okay, everyone stay home. Mayors said it, governors said it, everyone, that was said. But before that was said, a lot of folks said, you know what, the risk is too great. I'm not going to go out. I'm going to start sheltering in place. And the places that did that the most quickly are the places that are seeing the curve the most flattened and the most successful in combating this virus. But once the government says, and the governors say, and the mayors say, okay, now we're gonna open up and allow people to go do some things, not all things. We're not going to have sporting events, those kinds of things out of the gate. But then it's not enough for them to say, okay, now it's open. We all have to feel the opening. We all have to want to go to restaurants, and that, I think, is the real challenge. Isn't that they let us? It's that we feel safe, and I think that comes after they let us. After some time after they let us, and then, as we know, we're going to visit additional questions. Like there's going to be a round two, and we may have to revisit not quarantine but seclusion, resting, staying at home. That may come.
That's why this is so frustrating.
Scott, you're up. Are you? Nope, he's gone again. All right, I'm going to answer a couple of the questions and then Scott. John, do you have anything you would like to add?
Well, the clients that I'm talking to, that we're all talking to, they are concerned about the economy. No one knows when it's going to come back. But I think you're right. The shelter in place is something that we've never had to do before as a society around the world. And I think you're right. When this is lifted, people are not going to jump for joy and start spending money to jumpstart the economy. I think people are going to take it slow. I had a trip planned to New York City in June. That's probably not going to happen. Am I going to go to Hawaii in October? I mean, who knows? We may be putting things off for a while. And if that happens globally, then that's going to impact the global economy. I mean, there's more that makes the economy go than just going to the grocery store and going out to dinner. There's just all other kinds of industries out there that rely on consumers, and we don't know when those consumers are going to come back.
Yep, that's it. For sure. I'm going to answer a couple of these questions here. Scott's bouncing in and out, so I'm assuming he'll be here eventually if he has something to say. Okay. So there's a really important question that was asked, and I want to touch on this one real quick. Someone asked how I am, and I feel great. Everyone that asks, I feel a little guilty. Turns out I'm not as much of an extrovert as I think I am. I kind of like being at home. No one here is suffering. Like I have good food. I'm still working. So no one here is suffering. I think Kate would like to go out more, do more things. I went for a run yesterday. I was pretty surprisingly dead outside, quiet. I mean, but yeah, I'm doing great. Thanks for asking. What's the outlook on the S&P 500 rally is the next question. I think we've seen a rally. And again, this goes back to the question I started with. Is this a good time to buy, or should we be nervous and should we get out? I'm looking forward 3 years, 2 years, and I think that what's going to happen is, and David referenced this a moment ago. This quarter's earnings, and more so next quarter's earnings. When we start seeing earnings this week and next week and the following weeks, that's for Q1. Q1 had 8 weeks of mostly fully engaged economy in the United States, maybe 6-7 weeks, and then slowly declining as sort of the wave of the virus hit the U.S. Closures and stay in place. And so the first quarter is going to be probably bad, a decline, but not horrible. The second quarter is going to be horrible. And if you think about this, I read the statistics yesterday. Hotel occupancy is off about 80%. Airline flights are down 97%. Movie theaters are down 100%. Restaurants are off like 80-something%. So these parts of the economy are going to be just bad, really, really, really bad. Probably through the second quarter, maybe even into the third quarter a little bit. And the big question is, we don't know when we can go back. We don't know when we will be able to go, or if. And then the next question is, if we are able to go, if they allow us to go, will we go to the movie theater? I think eventually we will, but that may come 7, 8 months out. So we may have 2 or 3 bad quarters here. Here's the thing, though, about the S&P and how that affects. We're talking about the economy. When you talk about bad quarters, we're talking about the economy. Markets look forward. The economic data and the earnings data that we get is all backward looking. That's why the earnings this quarter, they're going to be bad. They're not going to be terrible because they're looking back at a quarter that was, half worked and half didn't work. When we look back after the second quarter, the whole quarter will be damaged, and that'll be a really bad quarter, both the economic data and the earnings data. But the market's going to look forward. The market's going to look at, what is the expectation? And here's the reality. When you think about and this is just one subset of companies, right? If you think about the 500 largest, most well-capitalized, rationally managed companies in the world, the S&P 500, or in the United States, the S&P 500, this is a short-term damage to their balance sheets, to their cash flow statements. When you fast forward 2 years from now, their projected earnings are going to be very similar to what they were last, 3 months ago. The projections are what matters for markets, and the projected earnings are going to be very, 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 very similar to what they were a year ago. Maybe even greater. I don't know. So I invest when I have capital to invest. I'm not trying to predict what happens because I'm not speculating. I'm not trying to figure out what happens in the next 3 months or 6 months. I'm trying to figure out what happens over the next, 3 years, 5 years, 10 years, 20 years. I'm 50. I'm not 50. Oof, I'm 48. So I'm thinking about what's this market going to look like for the rest of my life, and then what it's going to look like for my children's lives. So I'm thinking 70 years, and it's going to be a different world. This coronavirus thing isn't going to be it's going to be like the flu in 1918. That's what we're going to reference 100 years from now. We're going to look back and say, this is what this is. So the S&P rally could continue, could fall back, we could retest lows. I don't know. It doesn't matter for a long-term investor. It matters if you have to be right with a buy and sell today. But if you're thinking long-term, it doesn't matter. So someone asked a question, do you think these times are different than past history, or do you expect these times to follow the same pattern as in the past? Again, I don't think it's possible to know what pattern it'll follow. We have a lot of patterns to choose from. I think that there's going to be a lot of similarities, but there's going to be some things that change, at least until we have vaccine. When we have a vaccine, I think that we largely go back to what we did before. It's interesting because I'm asking this question, and my team maybe doesn't know this, but we just signed a new lease in our space, and we do have a couple people in there that are using the space, but we've actually been able to communicate amongst ourselves pretty cleanly. I'm not saying we've figured out all the efficiencies, but I think that we're one office that has figured out, Zoom. We've got some technologies. We're still figuring some things out, obviously. We've also figured out how to communicate via email, and we have a Slack channel internally. And so we're figured out some tools that let us communicate from a distance. And so there may be, I could see a future point where we have folks that don't come into the office. And that may translate into needing less square footage in the office, or keeping the same square footage and growing as a company and adding people, adding capabilities that we don't need to house in an office. I could see that happening. So I do see some things are going to change, and I think that we're one of many offices that are thinking this. I also think that one of my concerns is the broad effort towards globalization could be hurt a little bit by this, and I do believe that globalization is the right thing. I do believe that reducing the costs of doing business across borders is important. I'm going to mute you, John. And I think that there may be a response to this that is more negative than it should be, more fear-based than it should be. And not that we shouldn't be afraid, but I think that we need to be careful how we apply that long term. So some things are going to change, some things are going to stay the same. There's a lot that's going to change before we have herd immunity and vaccine. But after that, I think that there'll be a few things that change a little bit. I don't think that there's going to be a whole lot of change. One of the things that we're going to see in the next 12 months is a lot more companies invest in technology and robotics technology that doesn't rely on people as much. That's just pushing something that's been happening for a long, long, long time, pushing it to happen even faster. So there will be changes, but those changes aren't going to be endings. They're going to be new beginnings. I've been saying this a lot to myself, to my family. You may have heard this on this call before. Necessity is the mother of invention. Like, we will figure new things out because of this. Before, and maybe some people that were on the call early might have heard me say that I just got an email from a friend of mine who said his employees don't want to work. He has a small business. He has access to a PPP loan. He'd like to keep his employees engaged and keep paying them. And they said, no, just lay us off because our retirement benefits, our unemployment benefits are actually better with the additional federal stimulus for the next 4 months, anyways, than they were when we were working, right? So it's better than our paycheck, is what they're saying. Because if you had someone that worked half time at minimum wage, $600 a month or $600 a week, that's a lot of money. So they're saying, no, just keep us laid off for the next 4 months. So he's going to have a hard time kicking off the business when it comes back around. So some changes, some things stay the same. Go finish that one. Answered that one. Okay, I'm going to read this question. It's a little bit longer. I'm baffled by the notion of changing the content of an index and comparing the new average with an older one. Macy's has moved from the S&P and replaced with something else. Isn't this like adding a 7-footer to my basketball team and then claiming that the average height of the team is increasing? What would the Dow Jones Industrial Average be if it was the same companies as years ago, including New York Central Railroad and all the rest? It's a great comment, and it's so funny that people do actually compare portfolios to an index, not realizing that the index is also managed. It's managed by a committee. They make changes all the time. It's just, people do feel better with a benchmark. We benchmark our portfolios as well, but yeah, it's not apples to apples. There's a lot of companies that existed in the benchmark. In fact, if you look at the S&P 30 years ago and the S&P today, it's a totally different set of companies. And even more so when you look at the biggest companies, it's a different, so when you're comparing to a benchmark, you got to realize your benchmark's shifting as well. Good point. And then we have another pretty long question I want to answer here. Let's see here. Hi, Jonathan, hope you're well. I intended to get my book autographed. Question: after the $2.3 trillion support to the bond market on Thursday, that's not the fiscal bailout. That was the second thing or the third thing that Powell did from the Fed. Do you see a $4 trillion support for the municipal bond market after Jamie Dimon speaks tomorrow? More helicopter money. Where are the interest rates for home construction going? Home ownership. Thanks. So he also adds the question of modern monetary theory, MMT. You can Google that, lots of information. I think that, so there's lots of stuff going on in this question. We have to remember that the Fed put a lot of money in 2008, the Fed put a lot of money to work in supporting banks, and they got most of that money back out. So they put a bunch of money in, that money created a return, and they got the money back out. If we see, and in this case, in the bond market, they're basically buying bonds. They're creating liquidity, and they're helping banks and folks. Banks manage their capital structures so that they're strong. By the way, going into this, banks were stronger than they've ever been. for years and years and years and years, banks were incredibly strong. U.S. banks specifically, incredibly strong. The balance sheet of U.S. companies was incredibly strong going into this. And so there are some places, specifically energy, where there are loans that are going to go bad. And so they're doing a lot of supports in those spaces. The second part of the question was about the municipal bond market. Yeah, you could see, like, if you have a municipal bond that is paid for by bridge tolls, and nobody's going across bridges anymore, and that was a mandate. That was a mandate by the government that you can no longer go across the bridge. And I don't know if any of you've been on the freeway. I haven't seen the freeway in 4 weeks, so I'm assuming it's pretty vacant. And if it's vacant, those municipal bonds, they'll have to be bailed out in some fashion. And there's a lot of municipalities that are gonna suffer. They have lots of expenses right now and no revenue. And so this will maybe support those in some way. I don't know what that package is going to look like, so that would be speculation on my part to guess. There's going to be a lot of money printed and put to work, lots. We're going to have more that support small business. We're going to have probably a second round of checks go to people, especially if we're still sheltering at home, through May and into June. We're going to see more support. That support is global in nature. Every economy is doing this. And so in 2008, we had a roughly similar scenario where the support was global. Like, everyone had to do something. And a lot of the conversation on what about the dollar, what about inflation, that was a big concern. It didn't pan out. Actually, inflation cratered. Inflation went down. In the last 10 years, we've been doing everything we can to stimulate inflation, to create inflation, so that and it hasn't really worked. We have negative rates in Europe. Those are going to be more negative. We are really close to that here, which maybe one person saw coming. And there's this question about modern monetary theory. This is an argument. Is it completely? Is it Keynesian economics on Keynesian economics on steroids? Is it reality? Helicopter money is the thing that comes to mind. And the questioner referenced this. The more money we put out, the lower rates are going to go. The lower construction rates on construction and rates on homeownership are going to go. And that's true everywhere. So there's sort of a competition for creating inflation. And the US still has the greatest possibility of all of these competitors to create tax revenue. We have a massive economy. We have a lot of people who are very well off, who can absolutely afford 2 or 3 or 4% more on their income tax. And I think we can expect that. I don't know when that comes, but I think that's coming. And when that comes, you'll see that, the debt to GDP, that's large, but our ongoing deficit won't be as bad because we can actually pay for it. We just have to choose to pay for it. And that was, we referenced this last week, I think. That was when the U.S. Lost its bond rating. We were AAA, now we're AA plus, 2011. When that happened, it wasn't because we didn't have the ability to pay. It was a question. You might remember the government being closed. You might remember fights across the aisle. It was a question whether we were going to decide to pay. And because there was a chance that we would decide not to pay, on our debts, not fulfill our obligations to Medicare and Social Security and all the things we spend money on, because there was a question whether we were going to fulfill those obligations, the rating agencies reduced the quality of our debt. And right after that, our debt got, our costs to borrow went down for now 9 consecutive years. So the market didn't care that our rating went down from AAA to AA plus. They still believed that we would back our debt. And I think that's true. I think we will. So there's a lot in there. That is the last of the questions I have here. Does anyone have any other questions? Oh, here's another one. Just came in. It's interesting when I get these questions, and then I kind of want to spend some time and think about them before I answer them. But here I'm going to read it out loud, and then I'm going to figure out after the fact whether it's something I should read out loud. Here we go. As a result of our time to reflect, will we rethink the basic structure of our economy? That is, do you think that the necessity of increased continued reliance on consumption to maintain a thriving U.S. economy has been brought into question by the positive unintended consequences of isolation and inactivity? I knew this was going to be a hard one. I knew this was going to be a hard one before I started reading it. So I think that the reality is that we are far more stuck in our ways and far more resilient. And I don't mean resilient in that we overcome adversity. I mean resilient in that we go back to the exact same way we were before. I think I would not be betting on really, really, really massive economic changes or shifts in the way we consume. I think right now we're seeing people go through changes, and I think those changes exist because they're afraid. And what we see a lot of conversation around, we're at home, I'm spending more time with my family, maybe I'm gardening more, I'm walking in the forest a little bit more, I'm feeling really good about that. But the minute we are free to do other things, I think that and this is the way the human brain works. Actually, human brain actually works. We think that we gather a whole bunch of data and we make a decision and we move forward based on the very rational choice between all the choices that we have. But that's actually not how it works. How it works is we have all kinds of preconceived notions. We believe a lot of stuff. And then what happens is we're confronted with information, and our amygdala, our lizard brain, decides whether or not it's going to bring that information to our frontal lobe and our frontal cortex. And it will bring the information to our frontal cortex largely when it agrees with our previously held notions. It will say, you know what, we don't want to look at this right now. If it disagrees with our previously held notions, we rationalize things after the fact. So yes, there's a lot of people talking about, this is great, I'm spending all this time with family, and these are things that I love doing. And I hope that for some part of them, it's true. And for some number of people, it stays. But I really think what's happening is we are stuck at home, and going into this, we would much rather have been doing other things. And now we're trying to make ourselves feel better about the position that we're in. And so we're rationalizing that, yeah, we actually do feel better about the position that we're in. And we'll wait and see. We'll see actually when things are back to normal, when there is a vaccine. My assumption is, and I think that history kind of plays this out, after a war, after the flu of 1918, after, the Great Recession, after .com, after, we have these massive dislocations in markets and economies that change us in lots of ways. And then we slowly come back to the way we were. Now, a lot of, and we've kind of referenced this, a lot of these things, the way we were, will shift a little bit and change anyways. 10 years ago, 12 years ago, we didn't have iPhones. And so, we learn a lot of new things, and things change and shift because we have new opportunities. Maybe restaurants will get smaller. Maybe we'll have more separate spaces in restaurants. We can have more private conversation. I don't know if you've noticed in the last 7 years, how every restaurant I've gone to has seemed to add 7 more tables or 10 more tables or 30 more tables, more people closer together, which made it louder, made it sort of less ability to communicate with people across the table from you. Maybe we actually go to a more distant spacing between these tables, which means, the corollary is the price of the food is going to go up. The price of the service is going to go up. Maybe we see fewer people doing more, fewer people working at these places. So there definitely were changes. I think that long term, we tend to move in a certain direction. Maybe we consume a little bit less. We're definitely all going to have more delivery. So there's definitely more driving. Maybe we'll drive less. Other people will drive stuff to us. That we'll remain to see what comes. And I got a comment, and I'll say, you're welcome, Banu. Thanks for coming. Are there any other questions?
Jonathan,
Yeah, go ahead.
I would make a point. I think with regard to certain industries, the experience in the pandemic of not having things like masks and other apparatus that are needed in this circumstance, and having to get them from China and other places, there will probably be a return to more local manufacturing of some of those needed items, because we wouldn't need it to be reliant on other people for that. So I do see some shift.
Yeah, and that is largely a continuation of, you know, the tariff war policy. How do we bring more of this manufacturing back to the States? And that has been a goal of our current administration for, you know, since they took over. And this sort of forces that a little bit, and for maybe decent, you know, reasons. So going back to before 2001, you know, we didn't stockpile, you know, and I don't know all the details about this, but I keep thinking about the questions about who failed in this process, and fingers are, just like in 2008, fingers are pointing all over the place. And I just, before the event happens, before we see Corona coming, yes, there was a TED talk from Bill Gates saying that it was coming, and yes, we've seen lots of things. But you got to remember that before disaster strikes, we're preparing for everything. Like, we have to be ready for California fire danger. We've got to be ready for hurricanes. We've got to be ready for earthquake. We've got to be ready for terrorist attacks. We've got to be, there's an infinite number of things that we are preparing for. And we cannot be fully prepared for all of them. We can't be. So many of these things we're going to have to deal with as they come. And I think that, you know, if we've proven anything in the last 10, you know, 7 to 10 years, is we actually do pretty well in crisis. Yes, it's ugly. Yes, there's people that are horribly, you know, economically injured. Yes, there's people that die. But once the apparatus of our effort takes place, we overcome thing after thing after thing after thing. This won't be pretty either, but we're going to do that here. And we're going to look back, again, 2 or 3 years from now, we're going to look back at this and say, wow, that was really, really hard. And we did it, and we're past it. And then there'll be a new thing that comes. And I think after this, like David was saying, I think we will be more prepared for the next viral problem. But that'll require resources that we pull from other problems. And then we'll be less prepared for something else. And that's just the nature of, you know, looking backwards, we know what happened. Looking forwards, we do not know what will happen. And there's nothing wrong with that. It's just, we shouldn't, you know, I'm kind of an anxious person sometimes. And that should create anxiety, but I've looked at it and thought about it an awful lot. And that's just the way it is. We have about 13 minutes left. I actually want to ask him one more time. Scott, is there anything you'd like to add, subtract, mention after, you know, the technology challenges have worn off a little?
Nope, I'm really enjoying the day off here, just listening. Thanks.
Okay.
Jonathan, I wanted to make a point about indexes relative to that person's earlier question.
Good.
One, you know, when you look at the Dow and the history of the Dow, they're relying on 30 stocks as some emblem of the entire economy, which I think we certainly in our shop, we think that's an inadequate measure of the economy and the market. But I also wanted to add that when people think about indexes, they should also think about the construction of indexes, and the fact that some indexes like the S&P 500 are market capitalization weighted, which functionally means that the top 8 or 10 stocks in the S&P account for more than half of the value of the entire index.
Right.
And that index is very much driven by stocks, the largest stocks in the economy. Whereas other indexes are developed where each member of that index is equally weighted, and that gives you a very different perspective. So,
Very well said, David. Thank you. Yeah, we don't. I know that in folks's, they get their, when everyone gets their statements, they get there's benchmark data in there, and I think I said this earlier, but I mean benchmarks are important just to see how your portfolios are different, but then you have to actually see, you have to look underneath and see what it is, which differences are causing performance differences. And by doing that, the big difference between us and like the S&P or even the Russell 3000 is we hold a lot more securities. Our US portfolios have 4,500 companies in them. We are not married to a company or an industry or a sector. We believe in the economy, and whether this software company fails or not doesn't matter, because the demand, and this maybe gets to one of the questions that came up a little while ago about will we change our consumption? I don't see us spending less. I see us spending money on different things. And because when we invest, we're investing across the board in lots of different, in 4,500 US companies, I just assume that our average hourly rate of income will go up. Our number of people employed will go up over time. Our consumption will go up. What we consume will change. Maybe we don't eat at restaurants. Maybe we get delivery in more. Maybe we cook more. Maybe we don't. Maybe our plastic and glass goes into solar panels instead of whatever else it might have gone into. So yeah, it's really important difference between an index and kind of how portfolios is structured. So as someone just left and said thank you. So now I should remind those folks that are on the call today. You can always, if you want, no one has to do this, but if you want, I believe it's possible for you to ask questions anonymously. I think when I note that the question has been answered, it goes into everyone else can see the answered questions as well. And I believe names are on that. And so if you ever wanted to be anonymous, you're totally welcome to do that. And we've had a few people do it. I noticed no one here is doing it, but everyone's welcome to do that if they want to. And I'll answer the questions just the same. I don't have a queue of questions I'm not answering because I don't know who asked them. I'm answering every single question. We have about 8 minutes left. What I'm gonna do, is it possible for me to, Sarah, is it possible for me to unmute everybody? Because we have just 10 people. I don't see any other questions in the queue. I might just unmute people. Is that possible?
I believe so.
Is it one by one, or can I do it universally?
It's hard to see from my end because I'm not the host. So
Oh, I'm the host. Okay.
You're the host. I'm just a panelist.
So I'm going to go through and unmute people, and just, oh, it looks like when I unmute them, they show up on the thing.
Yep. Hello.
So I just allowed everyone to talk, and everyone's in name, so maybe people are on their phones. I just want to say thanks for coming. And if anyone has a question they just want to pose on the fly while we're like this, I'm happy to. Otherwise, I'd say come to the coffee on Wednesday. That's a lot more social. That's not like this. Everyone will be in sort of the same room together. if we get enough people, we may do breakouts. But is this helpful to everybody?
Yes.
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 Good.
Jonathan,
Yes.
can we get a copy of that financial preparedness checklist that you have in the office?
Yeah. The love letter. Yeah, I can. I have to find it, but yeah, I'll find it.
I have, Jonathan, I have it. I'll send it out.
Fantastic. Thanks, John. You see who asked the
That's
question?
that's to Frank, right?
Yes.
Frank and Catherine, yeah.
Yeah.
And John, if there's a better one, I mean, that's dated for sure, but that's, in terms of tracking everything, it's a good starting point. But again, when you have a plan with us, we have all that data as well. So
Frank's actually doing the micro stuff too, like your PG&E account number is, your password, your rep, what time the bill comes, all of that. Because that's
Great.
really useful if you don't know it.
Yeah. And now, no time like the present.
A lot of time to do it.
Just in case I keel over, Catherine will have all the data.
Yeah, that's good. All the micro stuff.
Yeah.
We got about 5 more minutes. Sorry about the tech difficulties earlier.
Will this be recorded so I can catch up on it?
Yes. You see in the upper left-hand corner, it says recording. We will edit it a little bit. Like we have a bunch of recorded stuff at the beginning that doesn't need to be there, and there'll probably be some stuff at the end as people log off. But yeah, we will put it up just like we have in the past on Deal With on the website. Is that right, John? We did that with the last one, right? John's missing. Yeah, I think we did it with the last one. So has anyone started a new exercise program or anything like that?
No. I've read 7 books though.
Ah,
There we go. That's great. I'm
doing lots of yoga,
fantastic.
online classes. They're really good. They're great.
You'll know what I'm working on when I say this. I'm reading John Gottman stuff. So what am I working on? Who knows?
Relationships.
There we go. That's right. I told Kate I need to be a better husband. Since we're stuck together, I need to improve.
And speaking of working on relationships, I unpacked my accordion. I might need to work on the relationship when I start practicing.
That's awesome. I didn't know you played accordion. That's great.
I don't. That's part of the problem.
I see.
After 20 odd years, I got Frank to finally play bananagrams with me.
What is that?
Bananagrams? It's like speed Scrabble.
Oh.
It's really fun. And right now we're tied.
You don't have a board. You just get letters and you start.
It's like Scrabble, but you go really fast. Each individual has their own. It's really
like
fun.
Boggle, only not 2D.
It's intense.
Yeah.
And fun.
Khaki, what is that bud on your photo? Is that maple? I think it's a maple tree. Can't really tell. All right, thanks for hanging in with us. We'll be here Wednesday for coffee. I believe there's a thing happening on Friday where we're going to go and do. We're going to tour Machu Picchu, so that should be fun. We're working on our theater event for the following week. It'll be a virtual reading of The Goat. That should be fun. And we'll be here again on Monday. I think it's actually at noon again. So if there's anything that happens in the next week, feel free to pop in. We'll do the same thing as we've usually done. I'll open with some comments. We'll make sure that the folks at the team that are more available, and then we'll go from there. Thank you.
Thank
for coming.
you.
Thank you.
Bye-bye.
Bye.